In today's video, we're going to talk a little bit about crude oil and that we need to take this work from one decision to the next. I'm going to start by showing you what I have on the daily chart. And that is some time and price support. Now, the timing actually comes from some of the symmetry here between some prior swings. For example, I have a prior high to low that was 18 trading days, another high to low into the recent low, which is 18 trading days. We have a decline here that's 16, which is similar. It's not exactly equal, but similar. I have another low to low cycle that is 32 trading days, which is equal with this current low to low of 32 trading days. Now beyond that, I have a price extension of a prior swing, and I also have a projection of another prior decline that gives us the potential support. What ended up holding was the 41.89 to 42.04 area. Okay, but now it's a little bit too early to get excited about a low in crude. Why? Because it has not been able to rally for more than all of these prior rally swings. Every time we tried, we failed. So what we really need to see, if this market's any good, is a clearing of this resistance that I'm also going to show you on the lower time frame chart. And then if we do that, it's going to be a better trade to wait for the next pullback to look for an entry, rather than making the assumption that this is a more important low. We don't know that, okay? Some of my shorter term traders probably did take a trade off of this support, but this is what we have to look at next. And this is the August futures. This is a 120-minute chart. And again, what I do all the time is I run the symmetry and I run the prior rally swings and have projected them from the most recent low again. And you can see that this current swing, or the resistance that I showed you on Twitter earlier, you know, this was a rally of $1.27 and it was almost equal to the prior swing of $1.26. But what's the most important is that it's less than all of these prior swings, okay? Because we really need to see it clear that to start looking good. So as far as taking it from one decision to the next, yes, we had a bounce off of the daily support with timing, but we're failing to clear this resistance that I showed you on Twitter a little bit earlier today. So 43.31 to 69 stood out as far as a resistance decision. 44.05 to 13 stood out above that. So now what? Well, some of you may have taken a trade against this resistance, and that's okay. It is definitely a trend trade setup. It's still a pattern of lower lows and lower highs on the 120-minute time frame chart, but you can't assume that it's definitely going to extend to the downside as it has in the past. Okay, in the past, you pulled back, you extended to the downside. You pulled back, you know, you would look for an extension to the downside, but you can't assume that that's going to happen. Why? Because we have time and price at this last low. So what you have to watch now at this point is, if this high is more important, then it needs to break all the support that comes in above this last low, and then it's more likely to head towards at least this 41.70 area. But think of it this way: what if the time and price low is more important? Then what should happen? Well, then you should just retest this low and then at some point resume the rally. So we don't know which of those are going to happen, but what you do is you can trade against what we do know. What we did know was that we had time and price at this last low. What we did know is that we had resistance that was important because it included symmetry right in this area. Okay, those are the things you can trade against. The rest is just opinion. Nobody really knows where the market's going. You've got one guy that says, you know, this is going to be, you know, there's going to be new lows in crude, or it's going to go down to 26 bucks, and then there's somebody else that's saying it's going to 50. Who cares? I mean, bottom line is you've got to take the trades with the defined risk that work a high percentage of the time. And you also have to have defined risk, so when you're wrong, you get the heck out.